Hi, I'm Sandy Botkin, CPA attorney and former trainer of IRS attorneys nationwide. And we're going to be talking about meals and entertainment. This is something that a lot of self-employed individuals miss. The general rule is that, first of all, the general rule is you can write off 50% of your entertainment as well as 50% of your friends' entertainment if you pay for them. So let's say I take someone out to lunch and I spend $25 on pretzels. Hopefully those are good pretzels. I can deduct 50% of that. You report the full amount to your accountant and your accountant takes 50%. There are some exceptions, but that's the general rule. It also applies to other types of entertainment expenses, such as fun and movies and things like that. Now, with receipts, you don't need a receipt for entertainment if it's under $75 per expense. That's the key. Now, I tend to keep receipts anyway, but you don't need it, according to the IRS rules, if the expense is under $75, whereas Canadians who are watching this do have to keep receipts for everything. That's one of the exceptions in Canada. Now, what's interesting about entertainment is who are your prospects? Who are people who can do business with you or give you referrals? Almost everyone is a prospect. So if you're not writing off almost every meal you're having with a legitimate prospect, I would like to suggest that you are losing money. And that's the important point. Now, what kinds of substantiation do you need to prove your entertainment is deductible? And this is very important. In the Internal Revenue Code and in regulations, the government requires that you keep a good tax diary or tax tracker, very much like TaxBot, and you document clear and specific discussion for business. It is very important that it's clear and specific. If you simply say the word goodwill, that is not specific enough. If you say the word prospect, that's not specific enough. You want to say things like try to get a referral, talked about a listing, talked about the income opportunity, talked about a procedure that if you're a doctor, for example, you're dealing with a patient. Be clear and specific. That's the point. Secondly, a lot of times people ask, well, can I have lunch and talk with the person next to me in the restaurant, for example? And that doesn't really work. You have to have an appointment arranged in advance. So let's take an example. Simply going to a restaurant and talking business with the waitress is not going to make that meal deductible. But if the waitress lives next door to you, let's say you're a realtor, and they want to sell their home or they want to buy a new home, and you say, well, I'll meet you at the restaurant, so you arrange to meet them in advance, then that meal would be deductible at 50%. You also have to have surroundings conducive to a business discussion. Now, that means no tailgate parties, no orchestra. People ask me, well, how about a bar? Can that be conducive surroundings? It could, as long as you get a contract signed. You have a lot of hard spaces where you can get a contract signed, such as on the table, the bar stool, or even the floor. And finally, you have to document, which we have in TaxBot, and you'll notice it is in TaxBot, you have to meet the 5 W's and an H. You thought there were 4 W's, like the 4 horsemen of the apocalypse. There's really 5. Who? What's their name? The IRS wants you to write down their name. That's true in Canada too. What? Was it a meal? Was it a business gift? Was it a product sample? Who, what, when? What was the date? The good news about TaxBot is that's automatically typed in. Where? I went to Outback Steakhouse. I went to Greasy Lloyd's or Paradise Restaurant. Write that down. Where? Why? This is something that's left out by a lot of self-employed people. Now, fortunately, in TaxBot, you'll see all these things. You don't have to worry about this. But you want to write down why. I tried to get a referral. Again, be specific. I talked about a listing. I talked about a specific product or income opportunity. Why? And finally, how much? Who, what, when, where, why, how much? Be specific as to what you write down, what your discussion was, and you'll have that peace of mind of never having to worry about an audit again in both U.S. and Canada because your records will be perfect. And that will definitely make your life less taxing.
Hi, I'm Sandy Botkin. Did you know that most people leave thousands of dollars a year on the table? Literally. I want you to imagine driving down the road and throwing $1 out the window every 2 miles that you drive. Think about that, because that's exactly what you're doing when you're not logging your mileage. The average person at my seminars increased their automobile deductions by $3,800 per year, and in many cases it's more than that. With TaxBot, it's easy to do with the integrated GPS tracking system. So here's what the deductions are, and then I'm going to give you tips on how to make your mileage deductible. First of all, there are 2 methods of keeping track of your automobile mileage. One is the IRS method, and the other is the actual method. The IRS method is generally for people who drive more than 22,000 miles a year and drive cars that cost under $19,000. That's the general rule. The IRS method for 2011 is 55.5 cents a mile for every mile you drive for business. 23.5 cents a mile for medical and moving. So if you're driving to the doctor or a dentist, you should be claiming 23.5 cents a mile, and a lot of people miss that. And 14 cents for charity. Every time you do fundraising, things like that, you get 14 cents. By the way, if you're Canadians, you also get a mileage approach. It's 52 cents per kilometer for the first 5,000 kilometers that you drive, and 46 cents per kilometer thereafter that you use for business. Now that's the IRS approach. So let's say you drive 10,000 miles for business at 55.5 cents per mile. You would get $5,550 in the deductions. It's neat, clean, and sweet. The actual method is where you get a percentage of your car, percentage of your gas, oil, insurance, wash, wax, depreciation to the extent it's used for business. It's not based on time. It's based on usage for business, even if it's only 1 month. So let's take an example. Let's say you drive 40,000 miles this year, of which 20,000 were business, which means 50% for business. And you spend $3,000 on simply gas and repairs, then 50% of that is deductible. See how amazing this deduction can be? In fact, if you buy a new sports utility vehicle or a new pickup truck, you can get up to 100% write-off of that business use of that vehicle. But again, you've got to track it. That's the key. You've got to track what is business. Here's a big tip that I'll bet you're going to love. Let's say you want to do something personal, like visit your mom across town or drop your kids off for tutoring. Now, normally that's not deductible. But if you can think of a client or a potential client nearby that you can visit and conduct business near your mom's home or near where the kids get tutored, so what you do is you call up and you set an appointment. You can then write off your mileage. You just wrote off a significant part of that trip, even though a good part of it was personal. Planning and documentation are the key, and that's what TaxBot is so great at doing. No more mileage logs or diaries. You simply tap a button that says Start Trip. And then at the end of the trip, you simply tap the button Stop Trip. That's it. And you get an accurate tracking with the starting and ending addresses estimated for you, and the mileage is automatically logged. Most clients increase their deductions by thousands of dollars a year just with the mileage tracking alone. Hi, Sandy here. You are living in a gold mine, seriously. If you don't have a home office deduction, you're just plain crazy. In fact, in 1999, Congress liberalized the home office rules. Bet you never heard that from your accountant. Here's what you need to do. You've got to meet several tests. You've got to use an exclusive portion of a room for business. It doesn't have to be a whole room. It can be part of a room. And how do you show it's exclusive? Here's where TaxBot comes in. You can actually take a picture with your smartphone and store it on the web and attach to your documentation. It's got to be used regularly for business. That means at least 45 minutes a day, 4 to 5 days a week. And thirdly, you've got to use it as your principal place of business. Now, to be your principal place of business, you've got to meet one of 3 tests. First option is the majority of your time must be spent at home doing business. And here TaxBot comes in by keeping track of the time you're spending. The other option is a new option that came in 1999, and it consists of 2 tests. Test 1 is that you don't have another office where you do any significant administrative work. You could have sales work at another office, just not administrative. And secondly, you do your administrative and management work out of your home. So let's take an example. Let's say you're a plumber who doesn't have another office. Now, the plumber sends all their bills and studies for their continuing education out of their home. Secondly, they don't have another office. Therefore, that qualifies as a principal place of business. Let's say 1/8 of your home is used for business or used as your home office. Then 1/8 of the utilities becomes deductible as business expenses. 1/8 of the interest is business interest. 1/8 of the taxes. 1/8 of your home can be depreciated. 1/8 of the rent, if you're renting, can be deducted. 1/8 of the maid service. 1/8 of the burglar alarm monitoring, and all those costs. A home office really is a gold mine, and you really need to look into it.
you're a business owner, you're doing this every day. 84% of business owners overpay their taxes by $11,000 every year. If that's not staggering enough, the even bigger headline is that you believe that you're not one of them. The truth is, it's very likely that you are. So why did you overpay? Too complicated? Too time-consuming? Maybe you don't have the right tools. Well, now you do. Introducing TaxBot, the quick and easy tool to help you lower your taxes by thousands. Let's say you're headed to a business lunch. When you get in the car, push Start Tracking. The GPS tracker will track the mileage for you. When you arrive, push Stop. After a business lunch, take a picture and store your receipts. Fill in the blanks and click Save. This records your mileage and saves the receipt to the cloud server in less than a minute. On average, you'll record $1 of tax deductions for every second of use. All of your records are IRS compliant and securely stored in the cloud. You can export your records and send them to your CPA or accountant. With TaxBot, you get on-demand tax education from former IRS trainer Sandy Botkin. Attendees at his Donald Trump and Tony Robbins live wealth seminars save an average of $10,000 a year. With TaxBot, you get that same information from Sandy in bite-sized training. You can spend 2 minutes a day complaining about your taxes or 2 minutes a day lowering your taxes by thousands every year.